Welcome to your Mortgage Insider Update for March the 24th. The Fed has spoken and they're going to sit on their hands and do nothing. Another round of holding at their federal funds rate. As expected, actually, not a lot of movement expected even into the future. The summary of economic projections were also issued at this round. Total GDP in the economy is actually, they're lowering their expectations to below 2% at 1.7%. This is projecting into the future. The last time they provided us this information, they had projected around 2.1% GDP, and to drop to 1.7 tells you the economy is slowing down a little bit, or at least in the eyes of the Fed. But they are keeping an eye on that before they make any major moves. Didn't really give us a lot of new information, no major announcements on the balance sheet or anything like that. So take a look at the charts. Really a muted response last week. This week, we're going to get PCE, personal consumption expenditure, on Friday. It's the Fed's favorite measure of inflation, expected to be kind of in line with the last couple of months of relatively high, above the expectation of the Fed. With that in the outlook, we'll take a look at the charts. So we do start off this week with the 10-year Treasury up 4.3%, up 8 basis points. It's kind of a pretty heavy rise from last week where we were actually pretty steady. Mortgage-backed securities are acting in the reverse. Their price is dropping, meaning interest rates are going up. We'll take a look at the 10-year chart. So currently we're right at the 25-day moving average, hoping that this will form a ceiling. We also have this black line Fibonacci retracement level that actually held pretty steady when we were pressured just over the middle of March before the Fed meeting. So we kind of bounced right along that and then came down last week, did not break below the 200-day average, actually held and thought about it on Friday. And so far, that is basically rejecting and pushing interest rates a little bit higher as we wait for more data, more news to come out. There's a lot of talk about tariffs that's starting to still cause a lot of nervousness in the market, where I think in the past, if there wasn't so much overhanging, kind of a cloud hanging over the economy with this tariffs implementation starting on April 1st, we might have seen rates come down already. But I think that is looming in the background on what we're seeing in rates today. We'll keep an eye into this coming week after the PCE report and see what that brings us on Monday of next week. And we'll be rolling out right before April 1st. So there will still be a lot of talk over this coming weekend of whether or not the tariffs are implemented, or if any deals are made or any extensions are provided to any of these countries that are facing pretty heavy tariffs from the United States. Come back to you next week. Take care.